Hey everybody, welcome to the webinar. We're going to start in a few minutes. Swing trading, what is it? And presented by ZozoStockwatch.com. So we'll let folks come into the room. Let's give them a chance. We're going to start in about 2-3 minutes or so. All right, so just bear with me while those folks file into the room and get settled in, and we'll be right back at you with the webinar. All right, so let's get started. So this is going to be talk about swing trading, basically what it is and the things that I use to put charts and stocks on my watch list, etc. It's going to be, you know, a decent length of a webinar, okay? And of course, we'll take any questions at the end, and that you can want to ask about the service or you want to ask about the topic we're discussing on swing trade. So let's go ahead and we'll get right into it. So first off, you know, my name is Mike DeRuzzo. I go by Zozo Stockwatch out there on YouTube, on Twitter and YouTube, and out there on social media. And I've been around for a while, trading for a long time, swing trading and day trading. And finally opened up a new service. I got some folks helping me with the back end, so it's really cool. I'm very excited to be doing this, and you know, I've been a moderator in certain rooms, and you know, they're either one or the other. They're either a day trading room or a swing trading room, and I've always kind of been both. I've been a swing trader and a day trader, so I said, well, if I do a service, I'm going to be both. So let's go ahead and we'll get right into it. By the way, that's my mugshot up there, and so let's do this. All right, so first thing is, what is swing trading, right? And I'm not going to bore you with, you know, all kinds of things, but this was the best definition I could find from Investopedia. Swing trading attempts to capture gains in a stock within an overnight hold or several weeks, right? So it can go from, you know, the minute you put that swing trade on until you start making a profit in that trade. Could happen in the next, you know, 10 minutes. And could happen that day, that hour, a week from now. But that's basically what it is. A little bit longer term hold than day trading, where you're just trying to, you know, get in, get some gains, and get out to increase your capital. But swing trading is a little more an extended period of time. Although, you know, sometimes swing trades you can get out within a day. But overall, though, they're for overnight holds and whatnot. All right, so you know, with swing trading, you look at multi-day chart patterns, and you know, you look for patterns, and you look for different types of candles and things like that. So that's basically what we're going to kind of get into a little bit for swing trading. So I know some of this may be redundant for some of you, but you know, if we have some new people, it's always good to kind of go over this and start at kind of ground zero, and then we'll work our way up. All right, and I assure you it will get a little more complex than this, but I like to also take new traders into consideration and new people into consideration that they might not have, you know, heard of the term swing trading. Okay, but if you just go to Investopedia, you can read more on swing trading also. All right, so what are charts, right? This is a basic premise. What is a chart? And it's basically the sequence of prices plotted over a specific time. And this is from stockcharts.com. And as you can see, this is a line chart of IBM here. And it represents, you know, time scale. The prices are being plotted. And from this, we derive, you know, some kind of conclusion that, you know, if this price does a certain thing, then this should happen. And if this price breaks a certain level, then this should happen, that type of thing. So, you know, you can use all different kind of charts. Some people to this day, you know, still use line charts, and some people, you know, use bar charts, and some use candle. Most people nowadays are using the candle charts, but this is basically what a chart is. All right, you have a y-axis, an x-axis, you have your time down here. This would be a daily chart, weekly chart that we're looking at, and then you have your price points on the right hand side here. So that's a typical of a chart. Okay, all right, now there's a good guy, Steve Nielsen. He's very good with candles and explaining candles. He has a really good book, so I thought I would throw a plug. I don't get anything from Mr. Nielsen. I never met Mr. Nielsen, and I just want to make that clear. But he has a website, and it's pretty good for learning about candles. His DVDs are a little bit expensive, but if you get the book, I think it's like $50-$75 for his book. So his book is pretty good. Candlesticks, and that's candlestickcharts.com. All right. All right, so here's a candlestick chart, okay, and this is a Japanese candle. So what makes a candle be green or red? So if you have a high here, okay, listed here, okay, and then we have the open down here on the bottom of the candle, but then it closes at the top of the candle, that becomes a green candle. And then as you can see, we have that low price down there. But this is basically what determines the color of the candle, is where you close based on where you opened. Okay, so if you open at the bottom of the candle and close at the top of the candle, then that would be a bullish candle and a green candle. Bearish candle is basically the opposite. You would open up at the top here, and then sellers come in and they sell you off at the close in price down here. So the candle would go red, and it would be a bearish candlestick. All right. And candlestick charts came from Japanese candlesticks. It's a style of financial chart used to describe price movements of a security or derivative. Each candlestick on a daily would show 1 day. If it was a 15-minute chart, each candle would show 15-minute charts. If it was a 1 month chart, each candle would show 1 month, so on and so forth. All right, so that's a little information on candles and time frames too with candles. All right, next up you have some candlestick patterns. Now, I don't expect you to memorize all these. I don't even know all of these candles, but I know, the ones that are, pretty popular, like the engulfing candles, bearish engulfing if it's a red candle here, or bullish engulfing if it's a green candle. And basically what it's saying to you is, hey, it was undecided here. Now we're taking out this high here and moving up, so that's a bullish. And here it's a bearish because we had this candle here and we're taking out the bottom or near the bottom of this candle, and we're engulfing this candle. So there was a lot of selling action negating all this action the previous day, week, month, etc. If you look at some candles here, like the doji, it's like an indecisive. It's a neutral candle, okay? So you had, the bulls winning up here and then the bears winning down here, but then we ended up in neutral territory. Neither one could make headway. And sometimes when you see this at the top of a nice move, all right, it would say, well, we're a little undecided if we want to purchase more, but you always have to wait for that next confirmation candle to make sure, okay? Now, if you're at the bottom of a chart and the chart has been selling off and you see a candle like this, that might say, well, we might be nearing a bottom, but we're going to have to wait for a candle for confirmation to take out maybe the top of this candle or some consolidation and then a move up. On an inverted hammer, okay, so you have an inverted hammer where you had this, well, let's start with the hangman. Okay, so you had this, buying come in, and we had the selling come in. Selling come in, and then you got this push up and this hammer. So it's a very positive, candle. All right, you call it a hangman, and this one we call an inverted hammer. But it depends where they show up on a chart. If they show up on a top side of a chart, it can be bullish or bearish. If they show up at the bottom of a chart when a stock is bottoming, okay, and you see a hangman like this, you might say, well, look, buyers came in at this price, so maybe they want to move it up. If you saw this inverted hammer at the top of a long run on a chart, you might say, well, they pushed it up to here, now they brought it back down, so that might be a little bit bearish for this chart. We'll have to see what that candle is going to confirm for us, okay? So everybody get that? And then, there's some other candles here, but, I'm not going to go into each one, but those are the, the spinning tops. Another one that shows, indecision, or maybe a top is coming in, that type of thing, all right? All right, so now we have symmetrical triangles, and basically they're consolidation triangles that can either break up to the upside or break out to the downside. All right, so when you see on this chart that the stock is breaking up and out, you might want to enter that stock and go for the move up. All right, same thing with this. You kind of have this consolidation here and then this push up. Next one is kind of this ascending triangle where you're in this consolidation here in the triangle, and then you finally break out, all right, and that's the ascending triangle. Here you have a cup with a handle, so basically you had a big run up, you pulled back, and then finally you break the top of this cup here, and you get a nice continuation move in the cup and handle. All right, so that's just a few patterns, and then there's some more. There's diamond patterns, and there's also tops of rectangles. You know, you have this consolidation for a few weeks, months, days, and then finally you get a decision one way or the other. And double bottoms, basically, you know, self-explanatory. The double bottom, where you have a bottom here, and then the buyers come in and they push it up. All right, so that's a few patterns for you. I'm not going to go into every single pattern, but you get the gist of it. Okay, there's bullish patterns and bearish patterns. There's reversal patterns, and so on. All right, now a good source that for finding out a stock here is, for instance, is Glue. And let's say you want to find out its beta. You know, beta is like the movement that stock is going to give you. This one is under 1, so that's fine. But here you can get all this information from Yahoo Finance. You have, you know, your next earnings date, for example. You also have the market cap. 599 million in market cap. So, you know, that's the information you can get from Yahoo Finance. You can get your volume there down at the bottom. Average volume, 3 million, over 3,600,000. Volume this particular day was 3,951,000 for the volume, and so forth. All right, so this is, you know, Yahoo Finance, and you can get that information there. And volume is an important thing. Volume and price are pretty much the two most important things, right? What price is it at, and what kind of volume is moving in on the chart. All right, so let's talk support and resistance a little bit. Here we have support, all right, and how does it become support? Well, basically because that stock is holding that particular price zone, all right? So we have here, we have the stock, you know, we held around this $60 area that we pushed up a little bit. We came back down to about the $60 spot, and support doesn't have to be an exact number. It can be an area, okay? A lot of people think that support just has to be, you know, okay, well, 60, you know. In this case, it is 60, but, you know, you see here we had support a little bit higher. So we call it, you know, a support area, all right? And then you got the nice pop after this, you know, bull bear battle around this 60, 50, 61 area, and then the stock took off, okay? But you wouldn't get involved in this until it actually proved itself. Now, this is kind of a gap up one. Would be probably a little bit difficult to get involved in that. But now you see that the stock comes back down to this support area. So you might say, well, it did it here, it might do it here. So if this stock takes out, you know, 65, it may run again. So that's kind of how support can help you. And then you watch the action in the candle. So that's support. In the other example here, we have resistance, right? Stocks coming up to a resistance spot, gets sold off. Up to resistance, gets sold off. So if you were, you know, long a stock, all right, and you saw the stock moving up and coming up to resistance, you might be, you know, you might want to anticipate taking some off on this particular trade because you know it had some resistance here, and so you would sell some here, which traders actually did, and then they move the stock down to another support area. All right, so that's support and resistance, this being resistance and that being support. All right, so what is this term? Multicollinearity, all right? Multicollinearity. It's a statistical term for a problem that is common in technical analysis. And you know, basically, to cut this down to, in a nutshell, it's basically too much stuff on your chart and too much of the same thing on your chart, all right? Avoiding multicollinearity, and I don't know if I'm saying it right, but we'll go with that, multicollinearity. Amid indicators, right? Multicollinearity, simply multiple counting of the same information, all right? The use of 4 different indicators, all derived from the same series of closing prices to confirm each other is a perfect example, all right? And we'll go more into it right here. So you know, for momentum, right? You can use stochastics, relative strength. I happen to use RSI. You could use the commodity channel index, Williams, but you can't use all, okay? You can't use all this and not use this, okay? That's basically what it's telling you. You could pick one, like if you went for Chinese food, you pick one from column A, one from column B type of thing, all right? But you don't want too much of the same thing, all right? Telling you all the same thing. You want to have different indicators. All right, mine happens to be relative strength, and a lot of folks use relative strength. But if you don't like relative strength, you can use commodity channel index, or you can use stochastics, but you know, you don't want to use too many of them, okay? All right, moving averages, pretty much everybody uses moving averages, and we'll get into more of that. Then you might want to use like, you know, MACD, which is what a lot of people use to, you know, see the trend. So MACD is very popular. It's what I use on my charts. So, you know, you might want to use that too. Or you can use average true range, but that's going to tell you more of how a stock moves more than, so then this will tell you what the stock is trending, okay? And by rights, you know, you can kind of see what the stock is trending by looking at the chart, but it's nice to have this on your charts, and I'll show you examples of that. Volume, you know, accumulation, distribution, you have chalk in money flow, volume rate to change, volume oscillator, on balance volume. Now all those are great, but you know, just to have volume on your charts is probably the most important thing, to see the actual how much volume is coming in and the sticks of volume, okay? So let's go ahead and look at one of my charts here. This is XPO. All right, and on it, now this is stockcharts.com, and you know, on it I have the 10, the 20, the 200, and the 50. Now I also use TC2000, and I'll show you that in a few moments later in the webinar. But here's how I set it up for stock charts. I have the RSI, MACD, and accumulation and distribution. All right, and basically with the MACD, you know, we're looking for, you know, these crosses of the black over red. We're seeing if the trend is going to change. With RSI, we're kind of, and it's set at number 14. We're looking for oversold conditions, and also stocks hanging around this 50 spot here. All right, above 50 is showing strength, above 70 is overbought, below 30 is oversold. But you know, we've seen stocks go, you know, down to 5, 6, 3. So you know, you have to use this in conjunction with other things on your chart. As far as the moving averages, you know, you have a 10, and by a 10 we mean you know, the lower the time frame, right? The lower the moving average, you know, the more times that it's going to. So basically for the 10-day moving average, it's basically an arithmetic meaning of giving a set of values. Like for a 10-day moving average, it would mean that, you know, for the past 10 days, the closing prices for that past 10 days, and then you get the calculations and you get the 10 moving average on your chart. And it would be the same thing for the 20, the 200, and the 50. Now these are pretty much the most common, the 50, the 200, the 20, and the 10. There's some other moving averages which we'll get into, but basically they're based on the closing price, and that's how they show up on your chart. There's a mathematical equation, and then you get the moving average. Okay, it's basically based on the price action, the closing price for, say, the 10 past days, 20 past days, 200 past days, and 50 past days. All right. All right, so next we'll get into, you know, this MACD and how, you know, it can help you on a chart. You know, here's just any chart, doesn't really matter. So back in October on this chart, you had this stock moving down. You had the MACD down at the lows. You had the RSI down at the lows. You had accumulation and distribution, you know, moving down because people were getting out of the stock. But then you get this bottoming action on the chart, and that's why I say you have to use them in accordance with what's on your chart too. So, you know, just because this is here doesn't mean that it would automatically be a bottom. But when this candle gets confirmed, you're making a bottom here, and then you take out the top of this candle, you know, that might be your entry for this particular stock or formation, okay? But also, as you can see here, on the RSI, you were very oversold. On the MACD, you had the, you know, the black line below the red, and then eventually, you know, turning up over here moving back up. Now, let's keep in mind, the action on the chart is always going to be leading the action of the indicators. All right. So like I say, you have to use these all in the same, you have to use them all as a tool together. You can't just use one and say, all right, well, RSI is down below 30. I'm going to buy the stock. No, you have to wait for the confirmation candle to, to show up. So this way you can take the trade. All right. All right, next one we're going to look at is, this zag, and it could be any chart, like I said. It doesn't have to be zag or whatever. But here's a zag coming down, and then finally it gets this confirmation candle. But you see on the RSI that it's been, oversold. The MACD kind of in an oversold state. The trend is, and starting maybe to turn back up. And then you have your accumulation distribution down at the lows there. But then if we look at the price action, it really comes down to, this candle taking out the height of this candle, confirming this candle that the downtrend may be over, and a nice candle at that. And then you get the continuation move. All right. So it could, like I said, it could be any chart. Here's another bottoming pattern, right? Stock was at 12, moves all the way down to, 7 or that 6 area. And, that's like a 50% retracement. And then you finally see that it turned here. Well, this was your confirmation candle. And you see here also on the RSI, we're oversold. And then the MACD starting to turn, the black starting to turn above the red. So that gives you kind of an indication that the trend may be turning. All right. All right, so you can use news to help you with your swing trading. Here's an example from the Trade Exchange News Service, and they put in the room AMD coming from CNBC, Tesla working with AMD to develop an AI chip, and we got in this name, and this thing took off, and we got a nice overnight hold. So swing trades can also come from news. All right, on stocks, and if you're there or happen to be there, or you would be alerted. And AMD ended up being a nice 1-2 day swing trade off of that news. Now the news ended up not being I guess fully sourced, I guess, and so then AMD went back down, but we did get a nice overnight trade. And swing trades, like I say, they can come from news. All right, let's go ahead and take another look at some other places where I get some, ideas for my swing trades, and that would be from my Trade Ideas scanners. All right, throughout the day, I'm watching the scanners, basically, and so are the people in my room. They're watching the scanners. But if you're a swing trader and you have a job and you can't do this, well, I'm doing it for you. Okay, that's the purpose of me, I guess, right? So I'm looking at charts throughout the day, trying to find the ones that I think are setting up. And my Trade Ideas scanners truly help me in doing that. All right, these are intraday scanners, and so I get idea generation from them, and then I pass those on to the swing traders, and they go on the private feed, and they're good for 1 or 2 day holds for each particular play. All right, next one up, we'll take a look. Here's SGMS, right, and we call this one. And this gets put out on the private feed and would read something like, well, 36.85, above 36.85 or 36.85 entry. And you see the stock moved up nicely. But this is put out on the private feed for our swing trading group. And it goes out there and also gets alerted to their phone. So this way they have time. So in other words, when the stock started moving, I said, if this thing gets over 36.85, that would be my entry. All right, and you can go as high as, on a swing trade, you can go as probably high as 15, 20 cents. So let's say you're not right there at 36.90. If you got in at 36, 36 or 37 dollars, that would be fine. Okay, and then you would, play your stop accordingly. We always give stops on our particular entries. Okay, so that's an example of on SGMS, and I think the stock went all the way up to about $47. Next one up was XPO, and we got in this one around that 64 area, and the stock went up to 67. Okay, but you see, had some consolidation here. We're holding above the 200, we're holding above the 10. The IYT, the sector that this is in, the transports, was strong, so we were looking for a stock maybe to break out of consolidation, and that's why this one got called. Next one up, we had Fitbit, that was called, and we'll play smaller names too, not just the larger names. And Fitbit, trying to get over, I think for this one we put 665 was the entry, and then the stock ran up over $7 for Fitbit. But you see, we had this consolidation, we're breaking out, and Fitbit had been in the news, and so that's what put it on our radar when it got over 665, and then it ran up nicely. Another one was Schlumberger. Oil was turning around. Schlumberger had been in this bottoming formation here, and we called this one over 64.05, and we got a nice pop all the way up to $70 a share on Schlumberger on this name. Okay, so swing trades can come from anywhere. You see this bottoming pattern here. Then I felt if it took out 64.05, and moved up, which it did, we got a nice swing trade on that one. Another one was SQ, and over 26.30. Stock went all the way up to, I believe, $32 now in that area, 31. And you see it was breaking out of this consolidation, almost a little bit of a cup here. All right, and then a nice move up on SQ. And by the way, these are TC2000 charts, and we'll go more into that in a moment. All right, so with swing trading, 7 questions, you should ask yourself, and you can read some of these for yourself. But, you should know how much you're risking on each trade. All right, you definitely want to know, what are the conditions of your strategy, your trading strategy? Are you, going long, short? Is the market moving up? Is the market moving down? Is the market strong? What sector are you playing? Is the sector that you're in, is it strong? Is it weak? Where will you enter is always important, but more importantly, where will you exit if you're wrong? Okay, that's probably one of the most important things. If you're wrong, where do you want to exit? All right, and you should have something based upon the chart. All right, and then as far as price targets and whatnot, it's okay to have a price target, but don't live and die by that particular price target. All right, you want to trim and trail as you get money. And take some off the table as the stock moves in either direction in your favor, if you're short or long. All right, don't get hung up on price targets, because I see so many people, well, they told me that it was going to go to, $55, and it only went to, $52, and I didn't sell any, and I didn't take any profits because I was waiting for 55. Well, I believe in trim and trail, okay? You have to take some off in increments, and I think that's still the best way to do it. Pay yourself as the stock is moving up. Next up, for swing trading, place your stops at a point that, if reached, will reasonably indicate that the trade is wrong. Not a point based on primarily, by the maximum dollar amount you're losing. So you might want to, you place your stop if it breaks this 200 SMA, or if it breaks, a certain support, or if it, breaks a resistance, or if a certain consolidation or pattern gets broken, then you want to get out of the trade. You don't just want to say, well, I'm going to base this on, losing $200, and that's my stop. You want to have an idea of where your stop should be based on something that has, that you see on the chart. All right. And a lot about charts is, what you see with the naked eye is what you want to trade. All right. I know I showed you a bunch of indicators, but what it comes down to a lot is, confirmation candles, volume on the chart, a certain level that needs to be taken out to make this chart look better. And all that can pretty much be seen with the naked eye. All right. That's, you want to trust your eye. You don't want to just trust indicators. You want to see the action on the chart. All right. So if you join my swing trading service, it's $29.95 per month. You get access to my private feed where we put videos on there. We also put out, the actual calls with entries and stops in a timely fashion, and you can hook up your Twitter feed, your Twitter handle, so that it goes directly to your phone, that you can get text messages and SMS messages, so you never, miss a call or a trade. Also included in that $29.95 per month, you'd get free 3-day access to the chat room. All right, so you get 3 days free to our chat room, and if you have any questions, you can ask me then. And also, like I said, it's $29.95. And the wonderful thing about Twitter is if you give it your mobile phone number and then you allow it to have notifications from my private feed to your mobile number, you'll never miss a trade because it'll come up in a text message. So even if you don't have internet access, you'll be able to see, you know, where we got into that trade. You'll be alerted. All right, some things that I use to find my you know, swing trade ideas, and I use trade ideas. And here you have most unusual daily movers, all right, whether they be to the upside or downside. I'm really big on block trades for swing trades. It's how we found JetBlue was off of a block trade. It was getting like 3 or 4 block trades in a day, and I put it on my radar, and so we got a beautiful trade on JetBlue. Or I can use biggest gainers for the week, biggest losers for the week. So if I'm looking for reversals, I may look at the biggest losers, etc. Okay. Next up, I also look at, you know, most unusual day movers to get ideas for swing trades. I also have this evening scan set up to find, you know, trades that might set up for swing trades or even day trades, but we're talking about swing trades right now, so I can find them with this evening scan. From Finviz, we have the 1 week performance, we have 1 day performance, and you can see which industrial groups are moving, so you can get idea generation from that. Another place that I get ideas, and I'm going to go ahead and stop out of this screen share, all right, and then I'm going to bring up some other places where I get ideas from, but I'm going to need the internet for that. All right, hold on 1 second. All right, guys, sorry for that little delay. I just wanted to switch out and show you some of the other ideas where I get ideas from. All right, and this is Finviz. It's free, and I have a strong small cap scan. All right, and you see I have it set up, and I'll show you something else in a moment, a video I did on scans, and that's free, and you can have that. But you see, you know, this one is set up, and it gives me, you know, different charts and whatnot. And basically, you can come over here and you click on charts. All right, and then it'll give you all the charts. I like to use the candle charts like it is set up here right now, so I can visually see it better. And you can run through like a lot of charts, you know, this way. Like the CALD might be interesting. And then you might want to look at CISN. So this gives you a lot of nice idea generation for swing trades also. And that's from Finviz, and that's free. And as I use them, I'll close them out. Another place I get some idea generation is from the Wall Street Journal, and this is free also. And you can see the address right here. And I'll give you all these links and whatnot in the webinar room. But you can get, you know, best performers in the small cap, best performers in the mid cap, and best performers in the large cap. So I get a lot of ideas from here with the Wall Street Journal and that free link. Next up, you could go to predefined technical indicators from stock charts. All right, and this one gives you, you know, oversold with improving RSI, and you know, you see the whole categories here. And I'll go through some of these bearish MACD crossovers, you know, bullish MACD crossovers, and so on and so forth. All right, bullish MACD crossovers. Let's just take a look real fast, you know, and then you can kind of, you know, click on a chart here. So here's the MACD turning up, and you see, you know, Aetna moving up. So, you know, you might get a good idea generation from this. And once again, these links will be provided for you. Once again, this is the chart that I use, but I also use TC2000 charts, and I'll show you that in a second. All right, this is my stock chart setup, and so you know, if you want to kind of copy it, it has the 10, 200, the 20, the 50, and then you have the RSI, the MACD, and I just use the default color. You know, you can pick whatever color you like. All right, next up we have strong small caps. All right, and this can give you idea generation also, and you see the setup here. And if you go here and you click on charts, all right, and once again, if you put this on candle, All right, and you can scroll through like a bunch of charts and see kind of in the small caps which ones are setting up for you. All right, so that's another way to get some idea generation. And let's close that out. And then I have some other scans where I get, you know, idea generation from, and you can use that also. Or I'll leave that up for a second or two. But don't worry, I have a video made on all these, and you'll be able to see that video. And I'll give you the link to that also. Another screener. All right, so Finviz, a very good source for, you know, helping you with your swing trades. And then here's Finviz again. You know, more stuff that's moving up and whatnot. All right, so Finviz is a very valuable source for finding scans. Then the other thing you can use from stock charts is this kind of like the performance chart for different industries. We have the cyclicals, they were down. These technology was up and so forth, and then you can see what was strong, what was weak, and you can get ideas based on industries too. Okay, let me move that out of the way. Here's another Finviz scan, so we'll close that. And then from Finviz you also get this one-day performance, industrial goods, conglomerates, and you can see this right on the Finviz site. All right, it's a sector group. And then you can actually do one for the futures too. Let's see, you have the futures, and you know, you can see copper or what was strong, orange juice. Not that that's going to help you with swing trading, but you know, you can just see what areas were strong. And over here you can see by sector and whatnot what areas were strong for the week, the month, 3 months, 6 month, etc. Okay, so that's another way you can pick out and get stock ideas. Now I did this video on Finviz, all right, over 12 free scans for you, and that's out on my YouTube channel, Zozo Stock Watch, and they'll put the link into the YouTube channel. Just look for this, over 12 free scans for you, and then you can have the Finviz scans, okay, and that's right on YouTube, and we'll put the link for that in the Omnovia chat room here. All right, so this is my site, zozostockwatch.com, and if you go under the Join Me, you can basically see for $29.95 private feed, and you get free access to the room for 3 days. Okay, so now the other thing I wanted to go into, and I'll get this out of our way, is in my TC2000 charts. All right, and as you can see, I don't put much on these charts, but I use these in conjunction with my stockcharts.com. all right, now I just wanted to show you something. I use the 10 SMA. So folks always say to me, well, why do you use the 10 SMA as opposed to the 8 EMA? And there's really not much difference. If you like the 8 EMA, you can go with the 8 EMA instead of the 10 SMA. All right, it's the two blue lines here. It's really, you know, not much different. All right, difference. If I take that one off, you know, you see, I like to use the 10 SMA. If you kept that 8 SMA on there and got rid of the 10, that's fine. You know, it's not off that much differently. The 5 EMA, I like to keep that on my chart. All right, some people like it, some don't. The 21 EMA versus the 20 SMA, you know, not much difference here. If you want to use a 21 EMA, feel free. I like to use the 20 SMA. All right, so I'll get rid of that, and then basically, you know, the 13 EMA, folks use it. I keep it on my chart. Normally I keep it a different color though, so I'll go ahead and change out this color. Just make it that color. Yeah, that's fine. All right, so that's the 13 EMA. Sometimes it comes in handy. All right, so I keep it on my daily chart. Some other things I keep on my daily chart to show me overbought, oversold is the 400 SMA and the 300 SMA. Sometimes you get, you know, nice bounces off of the 400 SMA, as you see with Intel here. We came down to this purple line, the 400 SMA, and then we bounced off of the 400 SMA and off to a nice run. And you'll say, well, you know, we held 34, okay, but we also had the 400 SMA there, and you know, gave me a little more conviction because I had that 400 SMA right there on Intel. So that's how it can come in handy. And also the 300 SMA, you can do the same thing. You get bounces off of that also. All right, so that's the 300, the 400. Then I keep the 100, the 50, the 200. And the thing I like about, these charts are for TC2000 is basically you can kind of just, go through them just with the click of the space bar. It makes it very fast to be able to go through charts and whatnot. All right, so you can look through like a bunch of charts. It's kind of what I do when I'm sitting there in the afternoons and it's a little slow. I can just go through a bunch of charts by clicking that space bar, and I can see different charts. All right, another chart I like to use is the 15-minute chart. All right, and you can see that here, and I also sometimes look at a 30-minute chart time frame also to see support, resistance, how the stock is doing, and so on and so forth. All right, like here's SRAX holding above the moving averages on the 15-minute chart, and starting to break out on the 30-minute chart, riding that 8 EMA, and then here's the daily. So it kind of narrows it down for you so you can kind of get an idea. All right, so that's pretty much the webinar on swing trading. Let me see if there was anything else. Don't forget, all the links will be put in the room for you that we went over, the Finviz and etc., etc. And let me see if there was anything else that I wanted to bring up. I'll just bring up the pricing once more. It's a private feed that they can be sent to your phone. Also, all you just have to do is give Twitter your mobile phone. You put that under your personal settings, and then you would say allow Zozo's private feed to send you notifications through your phone, and then you would get SMS and text alerts. All right, so it's $29.95 for the swing trade service, and you would get the main room, also the Omnovia room with the screen share for free for 3 days if you want to test it out. And then if you want to move up to the monthly, you can do that also for $84.95, and we do have a discount for you on that, so stay tuned for that in the webinar. All right, this has been Zozo Stock Watch. This concludes the webinar, but I'll stick around obviously for your questions about the service and what we talked about, and then we'll go from there. All right, everybody have a good evening that's leaving, and thank you so much for being here. Yes, this is being recorded in case I forgot to mention that. And I think that's about it. That's our swing trading webinar. All right, guys, and I'll answer your questions now.